Your corporation purchases $30,000 worth of inventory to sell to customers on account with its vendors. So your corporation purchases $30,000 worth of inventory to sell to customers on account with its vendors. Your company they agree to pay $800 a month. Well, this is poorly worded. I probably should have put a little bit better more into this, but let's see if we can do something with it. All right. So your corporation purchased. So we are purchasing $30,000 worth of inventory to sell to customers, and we agree to pay $800 a month. And we bought this on account, which means we gave an IOU, right? And so what we want to do is see what the journal entry is for this. So let's start with what we can touch. What can we touch? The inventory. All right. And are we getting inventory? Is it an increase or a decrease? It's an increase. We get the inventory. So we're going to have a debit inventory. All right. So we're going to have debit inventory of $30,000. All right. Debit inventory $30,000. And we got that inventory. And usually we're either going to pay with it one way or another. We're going to pay cash or accounts payable. And this is sold to us on account. So the journal entry is account payable. All right. And the account payable is going to be $30,000. And that account payable, that credit, so we get an inventory here as our debit, inventory of $30,000. All right. And that's our debit. That's increasing our assets. And there are two ways that usually we get inventory. We will have either a credit of cash, which we don't have because the problem said it's on account, but we'll have a credit of cash, which will reduce it and would keep it in balance. Or we'll have a credit of accounts payable, and we'll put it as AP and 30,000 here. And this AP 30,000 corresponding to this inventory, this increases our liabilities and this increases our assets. And the equation is still in balance. Our assets are going up by 30,000 and our liabilities are going up by 30,000. Nothing else has changed. So the world is in harmony. We followed all the rules, and this is how we would have this journal entry. What might be tempting is to put something related to this $800 a month with the agreement. We don't know anything about that, all right? This is just an agreement to pay it off, right? And that's nice to have, but there's no entry for that. This account payable, once we actually pay it, would pay the $800 a month, then we would have a cash coming out here, cash, we'd be credited, and then we debit the account payable right here, right, when we paid it off. But that's not being asked for, so all you really need to do with this problem right here is this journal entry right here. That's all you need to do. You know that, and you're golden.